So we are doing this paper of May-June 2023, paper 12. It is an MCQ paper. You have 1 hour for this paper and this question, and you will be given 30 questions. From 22 to question number 30, or maybe from 20 to 30, you will have questions which is based on absorption costing and marginal costing. And 1 to 20 would be based on your normal concepts. 15 to 21 or 20 would be based on limited companies and ratios. So you need to be through with your entire syllabus when you're doing the MCQ papers. It gives you a revision of the entire thing. Okay. Farhan, please read.
Okay, so question number one says, which row correctly describes an advantage and disadvantage of a partnership?
Okay, can you without reading give me an advantage of partnership?
The advantage of the partnership is that the risks will be split in between the partners.
Okay, risk will be split between the partners. From here, which is advantage for partnership?
From here, it's going to be access to more expertise.
Okay. Isn't limited liability an advantage?
It is,
Okay. All of this is advantage, in fact. Yes?
yes, yes,
Let's talk about disadvantage.
yeah. So the disadvantage would be that uh the partners might clash, which would put an end to their business,
Okay,
like
1 minute,
risk
hang
of
on.
disagreements.
Is
Yes,
limited liability advantage of partnership?
No.
limited liability. How is it not an advantage?
That's
Partnership has limited liability or unlimited liability?
unlimited.
Partnerships, okay.
What liability do they have?
Unlimited,
What do you mean by unlimited liability?
which means that more debt, more money owing to other people.
Ira, can you explain the meaning of unlimited liability?
It means that if you ever have to pay back a debt, your personal assets are also
Yeah.
in the collateral.
Okay, so this is not advantage.
Mm, okay.
This is an advantage, access to more expertise.
Yeah.
Okay, access to more expertise is an advantage and unlimited liability is a disadvantage.
Hmm.
Yes.
Option D is correct.
Okay.
We will also go and check option D.
Mm.
Indefinite lifetime of business. What does this mean?
Indefinite lifetime means you don't know the lifetime of the business.
Ira?
Yeah, it means that you don't know how long the business is going to last.
So that means it is a going concern.
Yeah.
Is it an advantage?
No,
No,
Why?
because you don't know.
because you don't know.
It's good now if your business goes on continuing.
Yeah, but you don't know when it's gonna end.
You want your business to end?
But you
No, but you
know if
have to
it's going to
know. You
end,
have to know.
you know if it's going to end anytime soon also then.
Yeah,
Yes.
this is also an advantage. Each partner is bound by the decision of other partners. This is dicey. It could be treated as an advantage also. It could be treated as a disadvantage also. If he is
Yeah.
making a good decision, advantage. If he is making a bad decision, disadvantage.
Hmm.
Yes.
The more appropriate answer is option number B.
Yeah.
Okay,
Yeah.
go to the next one. Ira, read. We'll do one on one. Okay, one Farhan will do and one Ira will do.
Okay. An asset is purchased on credit by a business. What is the effect of this transaction on the accounting equation?
What do you mean by asset purchase on credit?
Which means your asset will increase, and because it's on credit, your liability will also increase.
So asset will increase and liability will also increase.
So
So
it'll be,
which could
Miss,
be the
would
options?
it could either be C
Miss,
or
would the
D,
C
but
or D?
capital isn't decreasing. So I think
So
it'll be
what affects the capital?
capital will be affected if there's any
Withdrawal, drawings.
yeah,
Sorry,
capital will be
Miss, the
affected if
capital
there's any
would
money
be
invested again or
the
any drawings that
capital
are made.
changes with increase or decrease of capital get affected because of profits or losses.
Okay.
Profits will
okay.
increase capital
Hmm.
Hmm.
and
Loss will decrease it.
decrease capital.
Hmm.
So which one?
It'll be D.
D. Okay. Fine. Go ahead.
Okay.
Yeah. Come on, go to the next one.
Okay. So question number 3 says, which items relating to new manufacturing equipment are capital expenditure?
Come on, tell me.
Miss, I think it's going to be cost of the equipment
Oh,
and staff training cost to operate the equipment.
what is capital expenditure? Can you please explain to me?
Miss, what I think capital expenditure is like, um, it's basically like, is it related to like non-trading activities?
Ira,
Capital expenditures are expenditures that doesn't happen on a recurring basis. So like any
Okay, yeah.
machinery that's bought or any asset that's bought.
so what is capital expenditure?
Expense that is not recurring in nature.
But when you're talking about buying the equipment, what will be capital expenditure?
So firstly, the cost of the equipment, because that's a one-time expense.
Hmm?
Then delivery cost of the equipment, because that's also a one-time expense. Staff training. I think you might have to train them again. So
Hmm.
maybe that's revenue.
This is recurring in nature.
Yeah.
So capital
Okay, so
expenditure is all expenditure that is related to
Hmm.
buying the asset and using it for the first time.
Hmm.
So all the
okay,
expenditure that is related to buying the asset up to using it for the first time is capital expenditure. So cost of buying the asset and delivery cost of the equipment. Okay. When the asset is delivered, even the installation would be a capital expenditure.
yeah,
Staff training cost to operate the equipment. Now, when you will already start using the equipment, after that, you're going to train your staff. So, this is revenue expenditure. So,
okay. So it's 1 and 2. A.
yeah, let's go to the next one.
Hmm. The financial year of a business ends on 31st December. At the beginning of the financial year, the following payments were made in respect of a new machine. Purchase cost 60,000, installation cost 10,000. It
What is
was
this?
both of these are capital expenditure.
Both of this is capital expenditure. Okay.
It was discovered that the installation costs had been incorrectly treated as an expense. It is the
Tell me what is the meaning of this?
that instead of adding it to the like the total cost of machinery, they put it in the expense column of the income statement.
That means this amount
Has been put as an expense.
was being put as a revenue expenditure.
Hmm.
Yeah. So, capital expenditure was treated as
Revenue expenditure.
which error is this?
True.
Error of omission.
Principle.
Error of principle. You're principally wrong.
Okay, okay, okay.
Which error is this?
Principle.
Principle. Error of principle.
Principally wrong. You treated an asset as an
Mm.
expense.
Hmm.
So, what happens when you treat an asset as an expense?
The expense is recurring in nature, so your profit will be understated.
You've treated an asset as an expense. So, your expense is overstated, right?
Yes.
So if expense is overstated, what happens?
Your profit will be understated.
Your profits will be understated.
Hmm.
Okay. By how much?
So I think you'll have to charge the depreciation first.
Currently, from what we've read, it is understated by 10,000.
10,000. Yeah.
Okay. And they want the effect of this error on profits.
Hmm.
So Ravi, you're not going to talk about assets now.
Hmm.
Okay, fine. Read ahead.
It was so it is the policy of the business to depreciate machinery at 20% per annum using the straight line method.
Okay, fine. So your expense should have been less by 10,000.
Hmm.
Okay. If you would have taken asset at how much? 70,000?
Yeah.
So you would charge depreciation on it.
It will be 14,000.
It would be how much?
14,000.
14,000. So you minus 70 with 14?
No.
And
Now
then
you have taken asset for how much? In
3,000.
error. In error, you've taken the asset only for 60,000.
So it will be
Mm.
12,000 depreciation.
You have charged depreciation how much?
12,000.
12,000. Depreciation is 20% of this.
2,000
So
less.
you have undercharged depreciation
Hmm.
by how much?
2,000.
2,000. So because of this error, one expense is understated
One expense is overstated.
and one expense,
Yeah,
this 2,000 is not recorded, not depreciation.
yeah, it's not. So 10,000 is overstated.
This 10,000 is one expense is overstated
Overstated
by
and
10,000
one expense is understated by 2,000.
and one expense is understated. You had to charge depreciation of 14,000 and you have charged depreciation of 10,000. So depreciation of 2,000 is understated.
Yeah.
So overall, what is happening because of this?
So
Overall, one expense is overstated, one expense is understated. So I could say overall, 8,000 of expense is overstated.
hmm.
Yeah.
So miss 10,000 minus
Under,
2,000.
yeah.
Yeah, yeah. Which
So
will give us
one is
8,000.
understated by 8,000. So the
So
option is B. I
yeah.
will pause the video. I want you to rethink, redo, and come up with queries if you have. Farhan, please explain me question number 6.
Okay, so which error would not affect the agreement of the totals of a trial balance?
Hmm.
So A says a credit note for for 56 received from a supplier was entered in the books of prime entry as
What does
65.
this mean?
It means like a credit note. It's basically a wrong amount
Okay, it
entered
is
in
a
the
wrong
books.
amount.
Yes.
So was a double entry done for it?
Was the double entry done? No.
Read properly. You've received a credit note from your supplier. It was entered in the books of prime entry. Books of prime entry is your journal. From the
Journal.
journal,
Yeah.
it goes to the ledger, and from the
Yeah.
ledger, make your financial accounting. From the
Yeah.
ledger, you make your trial balance, and then you make your financial statements.
Yes.
So something which has been done wrong at the first stage.
Hmm.
Okay, it is a credit note received. Credit note received is for purchase returns.
Yes. Purchase returns.
The purchase return was entered instead of 56, it was entered at 65 on the very first stage.
Yes.
Okay, that means everywhere it was wrong.
Yeah. Everywhere was wrong. So
Will it affect the agreement of the trial balance?
yeah, it will affect because everywhere it was wrong.
What affects the agreement of trial balance?
The amount, yes.
Amount was wrong in the debit, it was wrong in the credit. So the total of debit will be equal to total of credit.
Oh, okay. Now I get it now. Okay. Oh, okay.
Hmm? Yeah?
Yeah, I get it now.
Okay.
Okay.
Then,
Yeah. A.
okay. Read the next one. So with
Yeah.
this, it will not affect the agreement of the trial balance.
Yes, it will not.
To the next one.
Yeah. Could you scroll down?
Okay.
Miss, the fifth one is still new.
Second one, can you read?
Me?
Yeah.
Okay, so goods
This
taken
option
for
is
own use.
correct.
Yeah, this must be correct, yeah.
Okay, fine. I want you to read the next one also.
Okay. So goods taken for own use by the owner for 180 were debited to the cash account and debited to the drawings account.
So there were two debits.
Yeah, there are two debits,
No credit.
no credit.
That means the debit is not equal to the credit.
Yes.
So this will affect the totals of the trial balance.
Yes, it will.
Okay, fine. Read the third one.
The discount received total in the cash book was not transferred to the general ledger. So
Discount
yes,
received
this
as what
was
balance?
discount received has a credit balance.
The credit balance was not transferred. So debit is not
Yeah,
equal to credit.
got to be equal to credit. So it's going to affect the trial balance.
Okay. Purchase return was understated. Purchase return has what balance?
Miss, I forgot like what is understated and overstated.
For that you refer ratios, errors video. But right now you tell me purchase
Okay.
return has what balance?
A purchase return has a credit balance.
Hmm. And cash account has what balance?
A cash account has a debit balance.
Okay. So purchase return was understated.
Yeah.
Understated, which side do we do the correction, Ira?
Understated will be same side.
Same side. So this will be corrected on the debit side. And cash account was overstated by 50. So this will be corrected on the credit side. Yeah? Yeah?
Yeah.
So this is what error basically understated and overstated. This is one account was understated, one account was overstated. So this is an error of compensation, right?
Okay. Yeah.
So this error in total would not affect the agreement of the trial balance.
Yes.
Even option A is correct, even option D is correct.
Yeah.
Which option will you choose?
It's not gonna
In
affect.
this, there is a role of suspense account that will come into picture.
Yeah. Okay. Yeah. Suspense account. What about that?
In this, there is a role of suspense that would come into picture. But in A, there is a error that is
None.
happening right from the first stage.
Yes.
There is no role of suspense account coming into picture. The correct option is option A.
Yeah. Okay.
Okay, let's go to
Yeah.
the seventh one.
Right. So a trial balance did not agree, and the bookkeeper found the following errors.
Okay, 1 minute, wait. Ira, you ready for
Okay.
this one?
Yeah, miss.
Okay. Farhan, you're not doing depreciation, so you can try the seventh one.
Okay. Yeah. Sure.
Yeah.
The motor vehicle.
Yes, Ira, tell me fifth one.
So the motor vehicles at cost
What do they
account
want us to find out?
depreciation charge for the year end.
Okay, they want depreciation charge for the year ending. Yeah, now come on, tell me.
So the motor vehicles at cost account had a balance of $90,000 at the beginning of the year on 1st January. On
Okay.
1st September in the same year, the following transactions took place. A motor vehicle was disposed of. The vehicle had been purchased in the previous year for $21,000. A, the second one is a new motor vehicle was purchased at cost of $24,000. Depreciation is calculated at 20% using the straight line method. Depreciation is charged on a month by month basis.
Hang on. Just give implications of what you're reading. You're just reading.
Okay, so we have to find the depreciation. So for
What about
firstly,
this? First, tell me this.
yeah, so 21,000 had been purchased in the previous year. So, and it's being disposed. You'll take depreciation, you'll multiply by
Then
20
in the asset account, what will you do?
asset account, mein you'll dispose it, you'll put it on the credit side.
21,000.
Yeah.
Okay.
So to find the depreciation, you'll do into 20% and
No, no, no. Just read the sentence and give me implication. What about this?
a new motor vehicle was purchased at cost of $24,000. So it will be put on the debit side of the asset account.
Okay. Now read ahead.
Depreciation is calculated at 20% using the straight line method. Depreciation is charged on a month by month basis for each month the motor vehicle is owned.
Okay. Fine. So I want to know the depreciation charge for this year.
Hmm.
Okay. Fine. In this year, you have disposed of this asset, right?
Hmm.
So what are the remaining assets with you?
90,000 minus 21,000. 69,000.
69,000 is with you. Okay. So this 69,000 is going to be with you for the full year. Yeah? Yes or no?
Yes.
Okay. The asset worth 21,000 is going to be with you for which from which month to which month?
From 1st Jan to September 1st.
So this is the disposed asset. So
Hmm.
for this, the depreciation will be from which month to which month?
1st Jan to 1st September.
Okay, so you're going to use it from Jan to September.
Hmm.
And then
New motor vehicle.
the new motor vehicle. So the new motor vehicle is going to be from when to when?
1st September to 31st December.
September to December. So you want depreciation charge for the current year. Yes? So what is the depreciation charge for this? First one, the remaining assets.
13,800.
20% is 13,800.
Hmm.
So the first depreciation charges for the remaining assets.
Hmm.
Then the second depreciation charges for the used asset, right? Disposed asset up to the date of use.
Hmm.
How much?
2,800.
Into 20% for how many months?
8 months.
Jan, Feb, March, April, May, June, July, August, September.
September you won't take na 1st September.
Okay, till August. So how much?
2,800.
2,800. And for the new asset that you purchase, that will be from September to December.
4 months.
So how much?
1,600.
How much?
1,600.
I cannot hear you.
1,600.
So what is the total depreciation charge?
18,200.
Hmm. Okay, fine. Come on. Farhan, the next one.
Okay, so a trial balance did not agree, and the bookkeeper found the following errors. A bank overdraft of 100 had been shown as a debit in the trial balance. A
Okay.
cash purchase of, okay, should I continue?
Yeah, yeah.
Okay. A cash purchase of 160 had been entered in the purchase account as 150. The purchase was entered correctly.
Entry in suspense account, right?
Yeah, opening entry.
First, I want both of you all to read and both of you all discuss and make the account, or you're done with it.
Let's discuss.
Yeah, both of you all discuss and then I will discuss. Understand this. The trial balance did not agree and the bookkeeper has found the following errors. Your first error was you had a bank overdraft of 100 and it had been shown as a debit in the trial balance. Can you tell me what balance does a bank overdraft have?
Credit balance.
Bank overdraft, credit balance.
Credit balance, and you showed it on the debit side. That means
Yeah,
because of your error one, you wrote the bank overdraft on the wrong side.
yeah,
If something you write it on the wrong side, the correction of it would be you will write it on the correct side and double amount. Yeah.
okay,
So the
Hmm.
yeah,
correct side of bank overdraft is credit. Yes.
yes, yes.
So bank overdraft will be credited by how much?
So bank overdraft will be credited by 200,
Okay. Since suspense will be debited by 2.
divided by 200.
So the rectification of this is that on the debit of the suspense account, you will write 200.
Mm,
Are you with me?
Hmm.
yeah,
Because it is suspense debit 200, bank overdraft 200. So on the debit of suspense account, you will write 200 because of your error one.
yeah,
Yes. Now the next one. Cash purchase is 160, but you wrote it in the purchase account as 150.
yes,
You purchased for 160 and you wrote as 150. So it
yeah,
means that the purchase account is undercast.
yes.
Purchase account undercast. What is the rule for undercast?
Same side.
Undercast same side, overcast opposite side.
Undercast same side. So purchase account is what balance?
Debit balance.
So undercast same side. So you will do the rectification on the same side. It is
Yes.
undercast by how much?
Undercast by 10.
It is undercast by 10. So the rectification entry of this would be purchase
Credit side.
suspense credit, and on the
Mm,
credit of the suspense account you are going to write 10.
yeah,
On the credit of the suspense account you are going to write 10. Are you with me?
yeah, yes.
Third error. Telephone invoice was for 400 and you have debited to the insurance account.
Yeah.
Instead of putting it on the telephone account, you wrote it in insurance account.
No effect.
Wrong name.
Yeah, so there's going to be no effect.
It is not going to affect the trial balance because you debited the debit thing only, but only under the wrong heading. It is error of commission. It is not
Mm,
going to affect the trial balance, so it will not affect the suspense account.
okay.
Bookkeeper has asked you to make a suspense account to correct the error. So what is
Yeah.
the entry in the suspense account? So in the suspense account, your error number 1 will be debited, error number 2 will be credited. So opening entry
Yeah.
will always be on the same side. So when I close this, 200 I write here, 200 here, minus 10, 190. Suspense account opening entry on the credit, how much? 190.
190. Okay, now I understand.
Are you with me?
Yeah.
Please go through it. I'll pause it. We have to find the correct cash book balance and the bank
Yeah.
statement shows the credit balance. Now, if I'm showing bank
Yeah.
statement shows the credit balance, so in the bank statement and in the cash book, cash
Yes.
book in is what balance?
Cash book in has
Debit.
debit balance,
Debit balance. And cash book out has what balance?
Credit.
credit balance.
Credit balance. Bank statement in has what balance?
Bank statement in credit balance and out debit balance.
And out debit balance. Okay, fine. So I want the correct cash book balance. That means they have asked me to do what? They have asked me to update the cash book.
Yeah.
They want the correct what balance?
Correct cash book balance.
So if they want the correct cash book balance, they have asked me to update the cash book. If they ask me to update the cash book, I will update the cash book with what things?
You'll update it with the following information:
We'll
bank
update
charges.
things which is done in the bank statement. It is
Okay.
done in the bank
Yes.
statement, but it is not done in the cash book.
Hmm.
Okay?
Mm.
Remember, you update the cash book only with this.
Okay.
Unpresented checks, and uncredited deposits.
Yeah.
Unpresented check and uncredited deposits, they always come in the BRS. So
Okay.
they want us to update the cash book. So we are going to update the cash book with the things that is done in the bank statement and it is not done in the cash book. Are you with me?
Yeah.
Yeah.
Okay, fine. Bank charges. Tell me it is done in the bank statement.
Yeah.
Yes.
Okay. It has not been entered in the cash book.
Yeah.
Yeah, it's not.
Okay, fine. So which side will it come in the cash book? In or
Debit.
out?
Debit side.
Which side?
Credit.
Bank charges means money is going out of the bank, right?
Yeah.
So it will come on the credit side.
Yes.
Check received from the customers have not been credited by the bank. What is this?
You're receiving money and it hasn't been recorded.
Hmm?
You're receiving money and it hasn't been recorded.
Okay, fine. This is uncredited deposits.
Yeah. So
Okay, this will not come in the updated cash book. Are you with me?
Yeah.
Okay, fine. Next one. Checks sent to the suppliers have not yet been presented. Will this come?
No, it won't come. It'll come in the BRS.
So take some time and tell me what will be the correct bank balance.
Okay, so the first thing, the credit balance is 83.
Okay. Now come on, tell me. I've given you all time. Bank statement shows a credit balance of 8360.
hmm.
Can you tell me the closing balance of the bank? The balance closed down. If it is a credit balance, that means it is a positive balance, right?
Yeah.
Yeah.
Yeah,
Hmm.
Yeah.
it is a positive balance. So if it is showing a credit balance in the bank statement, it will be what balance in the cash book?
So it's gonna be a
Debit.
debit balance.
It is going to be a debit balance in the cash book. Are you with me?
Hmm.
Yes.
If it is going to be the debit balance in the cash book, so debit balance, closing debit balance will appear on which side?
Closing debit balance, credit side.
So the closing debit balance is going to appear on the credit side of your
Credit
cash book.
side.
Are you with me?
Yeah.
Yes.
So 8360 is going to appear on the credit side of your cash book.
Yeah.
Bank charges of 124 has not been entered in the cash book. So
Yeah.
can you tell me, does this 8360 records the bank charges or it is not recording the bank charges?
It records the bank charges
Yeah,
because it's the
because it is the
balance.
balance as per the bank statement.
Yeah.
So the bank has already recorded this 124. Yes? So that means I don't need to record this by 124 right now. Bank has already recorded it. What do I want? I want the opening balance or I want the correct cash book balance.
Yeah.
Yeah. So I want the
Yeah.
correct cash book balance. Now I have received this check from the customers. Nothing has been done in the bank. But this
Yeah.
is the balance as per what bank?
Bank.
Yeah.
Yeah.
8360 is balance as per whom?
Bank.
Is balance as per bank. 8360 is balance as per bank. But I want
Yeah.
balance as per cash book.
Yeah.
That means they want me to find the balance as per cash book. So do they want the
Yes.
updated cash book from me or they want the BRS from me?
They want the updated cash book.
If they want me to come from the bank balance to the cash book, they want the BRS from.
Oh, okay.
Okay, fine. Now check receipt from the customers. Cash book has gone up, right?
Yeah.
Bank statement is still down. I want to go from bank statement to the cash book. What will I do? I will add. If you want to go from bank statement to the cash book, you will add the uncredited deposits and you will deduct the unpresented checks. What will you do? You will add the
You add uncredited deposit and minus the unpresented check.
if you want to go from the bank to the cash book, balance as
Cash
per
book.
bank statement to balance as per cash book.
Mm. So this
Uncredited
is
deposits
BRS, right?
add, yeah, and
Yeah. Okay.
unpresented checks will be deducted.
Yeah.
So can you give me the balance as per cash book?
Yeah. Well, it's so 5858. The answer is C.
5858 debit. It is
Yeah. The
very
answer is
important to understand whether they want us to make the updated cash book or they want us to make the BRS. First, we said we want a correct bank balance, so we thought we need an updated cash book. So we tried doing it, okay? But we did not get the answer. That means they wanted us to prepare the BRS. So you should use your brains if somewhere you get stuck like that. To the ninth one. Come on. Ira, read.
Which statements are benefits of control accounts?
Hmm. What statements are benefits of control accounts?
They, they check the numerical accuracy of the ledgers.
Is this a benefit of control account?
Yeah.
Okay, correct. This is a benefit of control account. Next one.
They help to identify missing entries in books of prime entry.
Do they do that?
No,
Why?
because they only do it from the sales journal and purchase journals.
So books of prime entry are not that?
But only two are there.
Hmm?
Only two. The rest are there.
They help to identify missing entries in the books of prime entry. Control accounts are made from the books of prime entry.
Hmm.
So how will they help you to
Oh, yeah.
identify the entries missing in the books of prime entry?
Okay.
So that is why they do not identify this. If
Hmm.
something is missed in the books of prime entry, then you have to go to the source document first.
Hmm.
Control accounts is made from the books of prime entry, so it does not help you identify this.
Hmm.
Next one.
No, it's not. Because it can't be 1 and 3. None of the options have 1 and 3 only.
So 1 is correct. 2
Yeah.
is correct. So A option cannot be there.
Yeah.
2 option is not correct, so it cannot be this.
So it's B.
So it is B. But does control account provide details of individual transactions? No.
No.
So the two benefits of control account, please write it as a notes for your theory.
Hmm.
They provide information for financial statements quickly, and they check the numerical accuracy of the ledgers. Write it in your notes.
Okay.
Learn it. So it's 1 and 4. Okay.
Hmm.
Let's go to the 10th one. What do they want us to find out? The amount received from credit customers. Which account will you make to find out amount received from credit customers?
PLCA
Customers, which account?
or customers. Yeah, so SLCA.
Customers, which account? SLCA. So if I have
Yeah.
to make an SLCA, how will I make it?
So SLCA normally has a credit balance. So,
Opening balance, SLCA has a credit balance.
oh, sorry, debit balance. Debit balance.
Okay, opening balance on the same side, closing balance on the opposite side.
Yeah.
Below the debit balance, what do you have?
So below the debit balance,
You have the credit sales.
You have
credit
the
sales.
credit sales.
Yeah.
Then discount allowed on which side?
Discount allowed is on the credit side.
Discount allowed is on the credit side. What do they want us to find out?
The amount.
The amount received from credit customers.
How much? This you have to find out. Come on, take
Yeah.
time. Do the total. Give me the answer. Give me the totals as well.
Okay. Yes, miss.
The answer was A. 119100.
No, miss, I'm getting the answer as D. 131,700.
How?
Miss, I'm getting my answer as D.
Ira, you?
What is A?
A.
I
What
I
is
did
the debit total?
31,000 plus 125.
Sorry?
It's 156,400.
So amount is 119,100. From 156,400, if you minus them,
That's
then
Oh,
11.
yeah, yeah, yeah. Okay, okay, okay. Sorry, sorry. I made a mistake.
okay.
Yeah, yeah, yeah. All right, yeah, now I got it.
Okay, fine. Which statement contains the correct accounting treatment for accrued income?
Accrued income.
What is accrued income?
Accrued income is income that you are yet to receive.
Sorry,
Income that you are yet to receive.
yet to receive. So that means it is outstanding income. So which statement gives you correct accounting treatment on the outstanding income? Outstanding income is current asset or current liability?
Current.
Current income is current asset.
Outstanding income is a current asset. And what do you do
Yeah.
to outstanding income? Add or subtract?
Uh,
You add it.
you
So
add it,
outstanding is added, all the prepaids is
subtracted.
subtracted. So first you need to decide whether outstanding income is current asset or current liability.
Hmm.
Okay. So outstanding income is a current asset, so you're going to add it.
Hmm.
Okay. And do the next one. Try. I'm giving you time and then y'all can discuss over here. Come on, let's do it together. Farhan, read the question.
Okay. A business receives rent from letting part of its premises. On 1st of January 2022, there was a balance brought
Receiving
forward.
rent, so is it an income or is it an expense?
Receiving rent is an income.
Okay, fine. So it is receiving rent, so it is an income. Okay, fine.
Yeah. So on 1st January 2022, there was a balance brought forward of
Can you
1,000
give
in
me
the
the
rent
format of
receivable
income account?
income account. Debit all expenses and credit all income.
Ira, can you give me format of income account?
Hmm. It's P-O-P. Oh, it's OPO. Okay.
OPOP IB.
Hmm.
Oh, yeah. Up,
What
up,
is the
I-
format of income account? It is OPOP IB.
Hmm.
Yeah.
So 1 month rent is received in advance.
Yeah.
So this is opening balance. Which side?
Opening balance bought
Opening,
for.
wait, opening balance, where is it written?
So this would be
Paid.
outstanding prepaid, income for the year, and amount received, right?
1,000 will be on the credit side,
So this
prepaid.
will be the first line will be for the opening balance, the last line will be for the closing balance, right?
Yeah.
So you have 1,000 in the rent receivable account. Advance
Yes.
you have received.
Yes.
So 1,000 is 1 month rent.
Yeah.
Okay, fine. Read the next line.
So a rent increase of 10% was introduced from
Yeah,
1st
the next
April
line is this one.
2022.
Next line is this one. Read properly.
During the year ended 31st December 2022, the business received further amounts totaling 13,000 to cover from 1st Feb 2022 to 31st Jan 2023.
Okay, so they have received the further amounts from Feb to 31st Jan.
Yeah.
That means for how many months they have received? For 12 months.
Mm.
How much they've received?
13,000.
13,000. So it is Feb, March, April, May, June, July.
Yeah.
Then August, September, October, November, December, and Jan. So they received 13,000
Yeah.
cover up till. Okay, fine. That means prepaid is for how many months?
Prepaid is for 12 months.
Year is ending when? The
Well,
year ending.
31st December 2022.
Year is ending on 31st December 2022.
Yeah.
Okay. So that means there is a prepaid of 1 month, right?
Yeah. Prepaid of 1 month.
There is a closing prepaid of 1 month.
Yeah.
Okay, fine. Now read ahead.
A rent increase of 10% was introduced from 1st April 2022.
Okay, so there was a 10% increase from 1st April 2022. So what was
Yeah.
the original rent?
The original rent was 13,000. And
COA.
1,000. 1,000. Yeah,
It was
1,000.
1,000 per month. Up till when?
Yeah. Up
Up till March.
till, yeah,
Up till March, correct?
yes, yes,
Then there was a 10% increase.
yes.
So the new rent from April was how much?
1,000 into 10%.
1000 into 110%. So the new rent was how much?
1,100.
1100. And you've received 1 month extra, right?
Yeah,
1100.
yeah,
There was no opening outstanding.
no,
There was no closing outstanding.
yeah.
Can you tell me the income for the year?
Okay, so 1,300 plus 1,000. Uh, 1,200.
I don't understand from where you get 1200.
12,900.
How much?
Oh, sorry.
12,900.
12,900 was income for the year.
Yeah, sorry, yeah.
Make the
12,900.
account.
So
When I make the account, I get the income for the year as how much?
you got it as 12,000, 13,000.
12,900. This is
Yeah,
the
income.
actual income for the year.
Yeah.
But your statement of profit and loss account has incorrectly included 13,000.
Yeah.
So they have showed income how much?
So they showed the income 13,000.
That means income is overstated.
Yes.
If income is overstated, that means what?
It's gonna overstated is opposite side,
The profit
right?
will be
What is the
overstated.
effect of the error on the profit?
Profit will be overstated.
If income is overstated, then profits will also be overstated, right?
Hmm.
Yes.
By how much?
So 100.
Okay, I'm
So the answer is A.
answer is. Come on, let's go to this. Ira, your turn. Ira, read. Ira, read. Rehan, you read.
Okay. A sole trader personal expenses had been paid out of the business bank account and included in a statement of profit or loss. What was the effect of this on the profit for the year and on capital?
Okay. So his
So,
expense has been
Miss, what do you mean? I didn't get it. Like personal expenses had been paid out to the business bank account? What does that mean?
his it was his personal expenses. That
Hmm.
means it was his drawings. His
Yeah,
drawings is given from business bank account. So his personal expense, if it is paid from business, it becomes drawings.
yeah, okay.
And it is included in the statement of profit and loss. Is the owner's personal expenses ever to be included in the statement of profit and loss?
Uh,
It is owner's expenses, right?
yeah, it is.
Is it business or expenses?
No, this is the owner's expense.
Okay, it is owner's expenses. You treat it as,
Hmm. As drawings, basically.
but you treated it as what? You put it in
As
the,
like an own. No, you don't like put this on a profit for the year because it's
you
owners.
don't put this, but you did it.
Yeah,
So you treat it as what?
you'll treat you'll
You
treat it
treated
as
it as. You
hmm,
treated it as business expense. This is the wrong thing that you did.
yeah,
This is the wrong thing that you did. What is the effect of this on the profit for the year? So you have overstated your expenses.
yeah.
If you overstate your expenses, what will happen to the profits?
If the Miss, I didn't get it.
Darling, it was your personal expense.
Yeah.
You have put it in the profit or loss account.
Yes.
Since you put it in the profit and loss account, you treated it as your business expense. Your
Okay.
personal expense is treated as business expense by you in error.
Okay. So it's going to be,
You have overstated your expenses.
yeah, I have overstated my expenses.
If you overstated your expense, so what?
If I overstate my expense, it's going to affect the profit for the year.
Profits will be
Affected.
understated or overstated.
Understated.
Expenses overstated, so profits will be understated. What about
Yes.
capital?
Capital. Capital will be understated. Yeah.
Why? Expense and profits have effect, right?
Yes.
Profits is understated.
Yes.
Because you put it in your expense, your profit is understated. And if it was drawings,
Yes.
so you will remove drawings from the capital. It's no effect, okay?
Yeah.
The option is C. Now I wanted to try 14th one, then I will help you.
Okay. Okay.
Come on, let's do the 14th one.
Hmm.
What do they want from us?
So they want us to find the purchases of the year.
Okay, they want us to find the purchases from the year. So they've given us the gross profit margin,
Hmm.
correct? And they
Yeah.
want us to find purchase from the year. What is the thing that is coming to your mind?
You'll
What is
create.
the thing that is coming to your mind when they're asking us to find the purchases?
So we'll make like an income statement format right now.
Okay, fine. We make an income statement format. So can I say sales minus cost of sales gives me gross profit?
Hmm.
Yes.
Do I have sales?
No, yeah, you have sales 200,000.
Do I have sales?
Hmm.
Farhan, you have sales.
Yes.
You have cost of sales.
No, you need to get the purchases for cost
Okay,
of
I have gross profit that is 25% margin.
hmm.
Margin is on
Sales
sales. So gross profit would be 200,000 into how much percent?
25%. So 50,000.
So gross profit is 50,000. So what will be the cost of sales? Go reverse.
Yeah.
50 minus 200,000. So the cost of sales is
50,000.
150,000.
Hmm.
Are you with me, Farhan?
Yes, miss.
Okay. Cost of sales is how much?
Cost of
50,000.
sales is, yeah.
Okay, fine. Now what do I want to find? I want purchases. How will I find purchases? I know my cost of sales is equal to what? Opening inventory
Plus purchases
Yeah.
minus closing.
plus purchases minus closing.
So you'll do
Cost
one.
of sales is 150,000, correct?
Hmm.
Yes.
What is opening inventory?
10,000.
Opening and when 10,000.
Plus purchases. What is closing inventory?
Yeah.
5,000. So you minus 10,000, add 5,000.
Minus 10,000 plus 5,000
Will be
is
145,000.
equal to P. This will go here. This will become minus 10,000. This will go here. This will become plus 5,000. So what is your purchases?
145.
Option
B.
B. Right?
Yeah.
Farhan, you're with me?
Yes. Yes.
Fine. Go to the next one. Can you read this, Farhan?
Yeah. So a partnership maintains separate capital accounts and current accounts.
When you make a separate capital account and a separate current account, what does this mean? Which capital account method are you following? Fixed capital method account or fluctuating capital account method?
Separate capital accounts means it's fluctuating.
No. You're making two accounts for capital, na? That means your capital account is fixed.
Yes.
And all adjustments you're doing in the current account. So which method are you following? Fixed capital method or fluctuating capital method?
So it's going to be. Miss, wouldn't it be fluctuating because you're making separate accounts?
You're making separate accounts, so you're keeping capital at one place. Capital account balance will not change.
So it's fixed.
So this is fixed capital account method.
Hmm.
So what statements are correct? Read the first statement.
Yeah.
Read.
So the capital account represents the retained earnings of the business.
Is it correct?
No,
What does the capital account represent?
the capital account represents the amount owed.
What does the capital account represent?
The
The money owner gets
money
into the
owner gets into
business.
the business.
Okay.
Yeah.
Does the capital account show the total amount owed to each partner?
The
No,
capital account. No.
because the capital account will only show you, because it is a fixed capital account method. Your capital
Yeah.
account will only show you money that the owner has brought into the business or he has permanently withdrawn, nothing else.
Yeah.
Okay? Capital
Yeah.
account and current account equals to net assets. Yeah.
Yeah. So it's D.
Net assets means what?
Net assets means the total assets.
Net assets means the owner's equity.
Yeah.
Net assets means the owner's equity. And owner's
Yeah.
equity is the capital account balance plus the current account balance. So only D is correct. Now,
Hmm.
I'll read.
Okay. Okay. So question number 16. X, Y, and Z are in partnership, sharing profits and losses in the ratio 2 is to 2 is to 1. X is allowed an annual salary of 10,000. Y has made a loan to the partnership on which the partnership pays interest of 50,000 each year.
5,000.
Profit for the Yeah, 5,000 each year. Profit for the year before appropriation was 150,000.
So they want
What
Z's
was
full share of
Yes,
profit.
that's yeah,
Okay. So profit
yeah.
before appropriation is 150,000. What else will do?
150,000 minus 10,000.
What is that?
That's the X annual salary,
Okay.
which will give us 140,000.
Hmm.
Then Yule has made a loan to the partnership on which partnership pays interest. So
What
wait,
else?
hold on. Wait, hold on. Yeah. So Miss Y has made a loan to the partnership on which the partnership pays interest of 5,000. So we'll add 5,000.
Why? Ira, are you there?
Yeah, miss.
Is he correct?
No, interest on loan you won't put.
Interest on loan is a charge on profits.
Yeah.
Oh, okay.
It is not appropriation of profits. Here we are only doing appropriation of profits. When
Hmm.
I say we are doing appropriation of profits, it means that we are distributing profits amongst partners.
Yeah.
If you're distributing profits amongst partners, that means interest on loan will not be deducted.
Yeah.
So what do they want from us?
They wants to find the Z's total share of profit.
Okay, fine. So this will be divided. This is the residual
Mm,
profit.
Yeah,
This will be divided between X, Y, and Z.
yes.
The ratio of 2 is to 1.
Yeah. Next, I got my answer as B, so 28,000.
How did you get it?
So 140,000 into 1 divided by 5.
Okay, this is now what you got, na? But what explanation you gave me, that was not justifying it.
Oh,
Okay, so
okay,
what
okay.
is the next one? Ira, read it.
Yeah. A company had sufficient balances in each of the share premium, general reserve, and retained earnings accounts to issue bonus shares.
Okay, so
During,
company had balance in share premium, they had balance in general reserves, and they had balance in retained earnings.
Hmm. So
Yeah.
during the year bonus shares were issued, the directors decided to keep the reserves in their most flexible form, which ledger account will be debited on the issue of bonus shares.
So if you're keeping reserves in the most flexible form means what?
That if in share premium there is no
Means you will
isn't
use
there?
capital reserves first.
Yeah. No, capital reserve में तो you will add ना.
Means you will use capital reserves first
Hmm.
and you will use revenue reserves last.
Hmm.
So if you're giving bonus shares, share capital will be credited.
Hmm.
What will be debited?
Share premium.
Share premium. Share premium is a capital reserve.
Hmm.
Are you with me, Farhan?
Yeah.
Yeah. So, Miss, what's the answer for 17?
D, na?
Yeah, D. Okay, yes, that's right. Yeah.
Okay. Now go
Yeah,
to the next one. What do they want from us? First, see what they want from us.
the total equity.
What is the total equity made up of?
The
So
total
the
of
total,
capital, share premium, general reserve.
So total share capital plus share premium plus general
yeah,
reserves plus retained earnings. Are you
retained
getting?
earnings. Yes.
Okay, fine. Ira, read.
X Limited, okay, from there. Bonus issue of one ordinary share for every eight ordinary shares. It is the company's policy
1
to.
minute, wait.
Okay.
So on 1st January, they have made bonus issue of 1 ordinary shares for every 8 held. Correct?
Yeah.
What is the number of shares that is held?
400,000.
Okay. So bonus issue is for how many shares?
So 1 over 8 into 400,000.
50,000.
Bonus issue is for
50,000.
50,000 shares. So
Yeah.
because I'm issuing bonus, my ordinary share capital will increase by 50,000.
Hmm.
Yes.
Yes?
Hmm.
Yes.
Okay. What will reduce by 50,000?
50,000.
By 50.
Remove 30,000 from share premium.
Okay.
And
Yeah.
Reserves are maintained in the most flexible form.
Flexible form.
That means I will reduce my share premium.
Yeah, yeah, to 50. Yeah.
and then you'll minus 20,000 from 70,000.
You will minus it from the retained earnings.
Yes.
Okay, fine. Then issue debentures.
But debentures won't come in.
This does not come in the statement of
Yeah,
general
this is not
profit.
count.
Okay, fine.
Yeah.
Then 1st December. Read Ira.
Okay.
Oh, a rights issue of one ordinary share for every 15 ordinary shares at a
So
price.
1 ordinary share for every 15 ordinary share held.
Yeah.
First, we will take the number of right issues.
Hmm.
So what is the total number of shares held now?
Um, 450,000.
So I will multiply by 450,000. So what is the number of right issues?
So
It's
30,000.
30,000 shares.
Yeah.
It was issued at how much?
Usage at 1.60. So into 1.60.
So
No,
30,000 into 1 will be what?
in the share,
In
Share capital.
by capital, yeah.
share
Share
capital and
capital will
into,
increase. Yeah, and tell
yeah,
me,
and 30,000 into 0.60 will give us the share premium.
share premium will increase.
Yes.
30,000 into 0.60 is how much?
18,000.
18,000.
Yeah.
So capital will increase by how much? 30,000.
18,000. Yeah.
And share premium will increase by 18,000. Are you with me?
Yeah. Yes.
Profit for the year is 1,20,000. Where will you add it?
You'll add it in the total and
Under under retained earnings.
hello,
Okay?
miss, can you hear me now? Can you hear me now?
So it will be added in the total and it will be added in the retained earning. Ira, are you there with me?
Yeah, miss.
Okay, fine. So they want total equity. So my ordinary share capital will become how much? Please
So
answer.
Ordinary share capital
120,000.
total will be 480,000.
Share premium, this will go away. It will become 18,000.
18,000. General reserve
Yeah.
remain as 10,000. Retained earning will be 170,000.
170.
170,000.
What will be the total equity?
So it's gonna give us,
Going to be added. Everything will be added. And the answer will become 878,000.
yeah,
Option? No, no, no. It's not 878. What's the total? Can you give me?
678, miss, 678.
678.
The total is 670.
So A.
So it is option A. Read the 19th one, please.
Which three key users of financial statements will be most interested in the statement of profit or loss?
Okay, employees should not be interested in my statement of profit and loss. Or employees can be
No.
interested,
But
but the
environmental
environmental
bodies.
bodies cannot be interested.
Mm,
Environmental bodies cannot be interested.
yeah.
Public should
Miss,
be interested.
so it's gonna be D, right? Shareholders, government, and
Most,
potential.
most interested.
Most, yeah. Shareholders.
Public can be interested because public become potential investors. But
Yeah.
better than public is your shareholders, government, and the potential investors.
Yeah.
So 19 would be option D.
Yeah.
Proceed with the 20th.
Yeah.
Which ratio decides whether you should supply or not or not supply goods?
Oh, trade receivable turnover.
Sorry, trade receivable
Oh,
turnover
no, 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 no,
ratio
not,
tells
not
you
trade receiver.
in
Not
how
trade
many
receivables.
days your customers would pay,
Will, yeah, in how many customers
suppliers
would pay?
would pay.
Yeah.
Current ratio tells you your liquidity position.
Liquidity position.
Which ratio will help Raj? Raj is a
Mm,
supplier.
yeah.
So he has calculated the ratios of a possible new customer. It is a new
Yeah.
customer. So which
Okay.
ratio will tell Raj to decide whether he should supply goods or no? The
So,
non-current
miss,
asset turnover
yeah, non-current
ratio,
asset, yeah, is one of
because
them.
it tells us how well a company uses its non-current assets to generate
Yeah.
revenue.
Yes.
So if a company uses its non-current assets very well to generate
Mm,
revenue, then the supplier can supply him goods because he
yeah.
knows that he will be able to generate revenue.
Yeah.
Are you with me?
Yeah. So it's the answer is
The answer
mm,
is
1 and 2.
1 minute, wait. My bad. My first. Come on. Non-current asset will tell you how well
Hmm.
your company uses your non-current asset to generate revenue.
Yeah.
But supplier wants to know whether he will receive money or no.
Yeah.
Correct?
Yeah.
Yes.
The supplier wants to know whether he will receive money or no. So if he
Yeah.
wants to know whether a new customer will pay him or no, he will look at his liquidity
Yeah.
and he will look at his usual payment period to suppliers.
Hmm.
Yes.
Yes.
Yeah.
Yes.
So he will look at his current ratio. He will look at his trade payables turnover ratio.
Yes.
Yeah.
Yeah.
The option is B.
Yeah.
Give me the formula to calculate the trade payable turnover ratio.
Repayable
So that's
credit purchases into
Trade
365.
payables over.
Trade payables divided by credit purchases into 365.
What is trade payables?
Trade payables would be the related to credits.
Give me the figure, darling.
Hmm. So owing to credit suppliers would be trade
Yeah,
payable.
46,000.
Yeah, so 46,000
Credit purchases,
would 80% purchase our own credit terms. So 600,000 into 80%.
into
So
360.
480,000. Yeah, 46,000 divided by 480,000 into 365.
Okay. So how much is coming?
Hold on. 3419. So that's 35 days. C.
5 days. Ira, where are you? Are you without your calculator?
yeah, missing without the cancel.
You cannot sit in accounts without calculator. Read the next one.
Okay, so the
Tell me
table
your
shows
return on
information.
capital employed.
ROCE is equal to PBIT
Profits from
divided by capital employed.
Into 100.
So into 100.
For
So profit
PBIT,
before, yeah, before interest. So yeah, profit from operations 11,000
capital
divided
employed.
by capital
I don't know
employed
my
would
capital
be,
employed. Just put it over here. My non-current assets and current assets is how much? 59 and 50. So this
yeah,
becomes 109.
yeah,
Non-current liabilities is 12. Current liabilities
yes,
is 40. So
yes.
capital employed, I need capital employed means what? Owner's funds plus the non-current liability.
Owners, non-current liability.
Yeah. So my
Yeah,
capital employed would be 109 minus 50 the current liabilities. No, minus 40.
yes. Minus 40 means.
11 over
So 11 over 109 minus 40. So
59. So will be
11 divided by 69 into 100. That is
15.4 is equal
15.9%.
to D6.
hmm,
D.
22.
So question 23.
Come on. Total
Okay.
administrative cost when 12,000 hours are worked.
Yeah.
Okay. Can you read the question, Farhan?
Yeah. So question number 23 incurs a semi-variable cost per employee hour worked. If hours work exceeded 10,000 and An extra fixed administrative cost 600 is incurred.
Okay. So he has worked
What will be the
1000 hours, so 600 is going to be incurred.
Yeah, so what will be the total administrative cost when 12,000 hours are worked?
Hmm. So it is a semi-variable cost, right?
Semi-variable cost means like
Certain
it's
amount
partially
will
fixed
be
and partially variable.
partly fixed and partly variable.
Yeah.
Let me take, when I work 8,000 hours, my cost is 20,000.
Mm.
When I work 10,000 hours, the cost is how much?
Six,
24,000. So we will find out
24,000.
difference in hours is how much?
4,000. No,
Difference in
2,000.
cost is how much? 4,000.
Yeah.
And difference in hours is 2,000.
Yeah.
So what is the ratio coming up to?
Two.
So 2 is the variable cost. So the variable
Yeah.
cost included in total cost. How do you calculate that? Difference in cost.
Yeah.
Ira, please make the notes for this. Variable cost included in total cost.
Yeah.
How do you calculate it? Difference in cost divided by difference in
Yeah.
the hours.
Yeah.
Please write it.
Hmm.
So difference in cost.
Divided by difference in hours. So variable cost included in total cost would be difference in cost divided by difference in hours.
Yeah.
So difference in cost is 4,000, difference in hours is 2,000.
4,000
So it is dollar
is
two.
equal to 2. Yeah.
Okay.
Yeah.
So now let's find out if it is for 8,000 hours,
Yeah.
into 2 will be the variable cost.
Yeah.
So 16,000 is the variable cost.
Yes.
So 4,000 will be the fixed cost.
Yeah.
If it is for 10,000 hours, check it.
Mm.
Into 2,
So 10,000. So that's going to be
20,000 will be the
20,000 variable cost,
4,000 is the fixed cost.
fixed cost.
So if he's going to
Yeah.
work for 12,000 hours, so
So
24
12,000 into 2, 24,000 minus
will be
fixed
the
cost.
variable cost.
Yeah. So 4,000 will be the fixed
The
cost then
fixed cost will be 4,000 for how many hours?
for
4,000 is for 10,000 hours only.
10,000 hours only.
If he works more than 10,000 hours, again he has to incur 600
So plus 600.
plus 600. So what is the total cost?
Total cost
Would be 24 plus 4 plus 6, 28,600.
28,600.
Ira, are you with me?
Yeah.
Ira, come on,
Oh
read the
God.
next question. Which costs are charged to individual job in a job costing system? If it is a job costing system, so the cost that is
Mm.
charged to the individual job would be direct labor, direct
Yeah.
material, direct labor plus your production overheads or plus your factory overheads.
Yeah.
So if you're doing an individual job in job costing system, the cost that will be charged will be your prime cost. And your prime cost is direct material plus direct labor plus your production overhead. Can we go to the next one?
Yes.
Ira, please read.
Yeah, miss. Why might a business use absorption costing? So, first one, to calculate
How
inventory
much for
valuation.
overheads, over absorbed or under absorbed?
Actually, I thought we were doing 26th one.
25th one.
Okay.
For overheads, under absorbed or over absorbed, what do we do? We take the
Take
actual.
the actual and then you'll minus the budgeted.
Then you take budgeted OAR for
Huh.
actual hours.
Yeah.
Please write it in your notes, okay? I want some notes to be prepared.
Hmm.
How do you get OAR?
You'll do
OAR is equal
budgeted
to
active.
budgeted
Budgeted
at
overheads
Divided by
overheads
budgeted
into budget.
activity.
divided by budgeted activity level.
Hmm.
Yeah,
What is budgeted overheads?
620,000,
Budgeted activity level.
12,400.
So what is the OAR?
50,
Sorry,
50.
50. So AR is 50. Into actual hours is how much?
Actual hours is 1310.
Yeah, so it'll be
13,100.
yeah, so it'll be
Hmm.
65500.
So how much?
655 000.
55,000.
655.
Okay. So you
Yeah,
actually incurred this much, but you recovered this much.
yeah. So it's gonna be
15,000
Got this much and you recovered this much.
to overabsorb.
So that
over
you
absorbed of
over
A.
recover. So it is overheads, over absorbed.
Mhm.
Yeah,
How much? 15,000.
A.
Go to the next one, 26.
Hmm. Why might a business use absorption costing?
Why does a business use absorption costing to value inventory, to calculate
Yeah, that's the
selling
first one.
price, to include
Yeah,
production cost for units produced? It's for all three we use absorption.
A. Yes, that's it.
Okay,
Yeah.
go to 27. Gareth, read the question, Ira.
Gareth makes and sells bread. He has calculated how many loaves he needs to sell each day in order to break even. Which factor helps him accurately analyze his break-even point?
Okay, what are the things that help you analyze your break-even point? How do you calculate the break-even point?
Fixed cost upon contribution per unit.
Fixed cost divided by contribution per unit. He has calculated how many loaves he needs to sell each day
Hmm.
in order to break even.
Hmm.
Which factor helps him accurately analyze break even point? All of his production is sold on the day it is made. So what he produces,
He actually sells it.
he's actually selling it. He sells different types of bread. Will that help you analyze the break even point?
No.
No. Seasons?
No.
No. And selling price, reducing the selling price? No. So if you even this is not going to accurately help you, but if you look at the assumptions of break even point,
Hmm.
it assumes in marginal costing
Hmm.
all units
Let's say
produced
assume,
is equal to
yes.
units
So
sold.
the answer, yeah, so answer is gonna be A, right?
So it's going to be
Answer will
accurate
be
in his case.
to the 28th one.
Hmm.
What will happen
28th.
to break even point and margin of safety if fixed cost increases to 32,000? Come on, let's
Okay.
calculate the current break even point.
Hmm.
How do you calculate break even point?
Fixed cost upon contribution per unit.
Fixed cost upon contribution per unit.
Will be 25,000 divided by 8. So it's 3125 units.
Sorry?
Yeah.
It's 3125 units. So margin of safety will be
Let's first talk about break-even point only.
okay.
If fixed cost is increasing to 32,000,
So 32,000 divided by 8. 4,000 units.
so the break-even point units will increase by how much?
875.
75.
So it could be option C or D.
Or D.
Yeah.
It could
No,
be
it's going to
C or
be
D.
C.
C
It's going
or
to be C.
Yeah,
so
because
we have to calculate the
Hmm.
margin of safety.
hmm,
Actual
actual will be
minus break-even point sales.
Yeah.
So 8,000 minus for the old one, it would be 3,125.
125.
So the
Yeah.
margin of safety is how much?
4875.
4,875. Now let's calculate the new margin of safety. Actual minus break-even point. Actual is
4,000.
8,000 and new break-even point is how much?
4,000.
4,000. So this will be 4,000. So margin of safety is also
Decreasing
reducing.
by 875.
It is decreasing by 875 units.
Yeah.
This is old margin of safety. This is new margin of safety. So it is decreasing by 875.
Hmm.
Are you with me?
Yep.
Farhan, are you with me? Farhan, if material is in short supply, which manufacturing pattern will maximize profit? Ira, what are they asking us to calculate?
The profit optimum.
Optimum product plan.
Yeah.
So to make the optimum product plan, what we will find out?
Limiting factor.
Contribution
Contribution
per
for
limiting
limiting
factor.
factor.
So to find the optimum product plan,
The
we will take
material.
contribution per limiting factor.
So the material is the limiting factor.
Material is the limiting factor. What is the contribution?
Contribution is
Let's see the variable cost for all. 40, 50, 60, 75. Here and here,
first one is 25.
4, 5, 6, 7, 88.5. And here, for third, what is
31.5.
the variable cost? 48 plus 29 plus 20. 97.
So
Okay.
130 minus 97. 33.
Now I will first find sales minus variable. First I'll find the contribution.
Contribution. So it's 25, 31.5, and 33.
XYZ. Sales is 100, 120, 130. Minus variable cost is 75. What is it?
25, 31.5, and 33.
88.5
Oh,
and
no.
97.
Hmm.
So the contribution will become how much?
25,
25. Come
31,
on, 10.
31.5,
31.
and point 0.5, and then 33.
No, limiting factor.
Hmm. So you'll do 25 divided by 40 will be 0.625. Then 31.5 divided by 45 will be 0.7. Then 29, no, 25.5 it is.
Hmm?
Okay, no, nothing. 33 divided by 48. So it is 0.68. So
Point.
687, yeah. So first you'll do 0.71. So it is Y. Then second you'll do
Z.
Z. Then third you'll do X.
Okay. So contribution for limiting
YZX.
factor YZX. Option B.
Hmm.
Only 29 questions?
No, I have a 30th one.
Okay, come on. What is the 30th question?
Why would a business use cost to volume profit and analysis?
A CVP is used to get the relationship between the sales and profit. Cost volume.
Okay.
Volume, sales, and profit. It is not used for long term planning, it is not used for valuation of inventory, and it is not used to decide which cost is fixed and variable. So, this is the best suited one.
Okay.
Option D.
Hmm.
So, with this, we complete May June 23, paper number 12. Okay.
Yep.